Hi, welcome to the Tom O'Brien Show. I'm John Logan filling in today. Tom will be back next week. Thanks for joining us today. I'm joining you from beautiful North Carolina, beautiful hot North Carolina, and I hope you guys are doing well today. And we had some volatility again today, no doubt. Yesterday I was doing Tom's show, and we had just a 300-point rally from the bottom. Now it seems like we've got a 300-point rally from the opening, or excuse me, 300-point slide from the opening. I'm going to pull up our S&P chart. I mean, this is basically the topic of the day, and let's just get right into it. Here's the daily chart. We had talked about this profile appearing well above price action on our daily chart here, and that happened the other day, and we're going to just stay with that is a very, very bearish sign. That being said, some of the numbers that Tom and I had spoke of the other day on the S&Ps, the 75 and the 78, 79 area has held. Yesterday's highs were around 79, I think 78, somewhere in there. So the reason we still take a short stance on indexes like this is we're going to pull up our breadth indication in our TAS profile scanner, and this is something that we don't argue with too much. We're going to pull up our heat map grid here in the scanner, and we're going to take a look immediately at the S&P 500, and we're going to look at our breadth charts. And as we have referenced pretty regularly lately, we had a major change in tone and breadth on June 4th, and that's when the S&Ps, for the first time, we got a signal on the negative side since September 26th. We had that signal again. We had a reversal back positive around October 24th, but since October 24th, we've been breadth positive. And on or around June 4th, June 5th, we turned negative on a long-term basis, and therefore we were looking for opportunities to continually bang the index on the short side. All right. Now we've had some volatility this past month. There's no doubt about it. That's exactly what you need as a trader, as an investor. It's a little bit of a harrowing experience to try to figure out what to do here. But when that breadth long-term situation turns negative, historically speaking, if we slide on the net profile negative side, we want to look for opportunities to short, or at the very least go to cash for long-term investors, and that's basically what has told the tune here when it comes to trading the S&Ps. Now, I'm going to show some historical data on different indices when it comes to breadth. I'm sliding these into the den right now. Here's the TIE set 100 on our daily. This is our breadth crossovers, positive to negative or negative to positive on a P&L curve, back testing back to 2009. Why am I showing you the TIE set 100? Here's the Nikkei. I'm going to come to the answer to that question in just a second here. Here's the Nikkei 225 on a 60-minute back to 2012 P&L curve based on breadth crossovers. What does that mean? That means when we have a net breadth positive situation on our 60-minute, we're going long. We have a net profile negative situation, we're going short. I'm going to show you one on the Shanghai. This is the Shanghai 180, and this is our 60-minute on the Shanghai 180. And this is a P&L curve based on breadth crossovers. The reason I'm showing you these on different indices right now is it is proof of concept across most major exchanges looking at this indicator, and that's been the case also on the S&Ps. I'm going to pull up our S&P 60-minute crossover, if I can find that really quick. I think it's my last chart here. Here we go. Here's our weekly, which doesn't happen that often. But as you notice, back since 2009, this is a P&L curve for our weekly net positive or negative crossover. Here's our 60-minute. All right, so on most time frames, on most exchanges across the globe, when we look at those breadth crossovers, we've got to pay attention to them. And those breadth crossovers we look at relative to the scanner here. We deliver quite a few things in this scanner. One of the things that is really interesting. It's basically a product that has 6 components built into it. You get the breadth charts, which are very, very positive, and here's our S&P breadth charts. Here's our weekly view. I'm going to pop this up, and we're going to look at, there's that June 5th, 4th area. There's that September 26th area. I'm going to blow these up a little bit so you can see these, the most recent situations. I'm going to take out our middle ground. These are net breadth crossovers here. And as we look at these in the scanner, this is one of the 6 main things that are delivered within this product. We've got our heat map grid that basically allows you to rank these particular exchanges on 4 different time frames. So I'm looking at our exchanges right now in our daily. Here's our weekly ranking system. As you can see, most of the indices on the globe right now are net negative profile breadth. And we go to our 4-hour. Here's every exchange on the globe right now on a 240-minute breadth ranking system is negative. So I don't think I need to tell you folks that, but that's the second main topic built into the scanner. We've got also, if you want to take a look at the scanner and look at some of the rhetoric, we've got that automatically piped in. I'm going to go into our daily grid here and pull up our S&Ps. And if we pull this up, I can go up to the TAS Says button at the top and get a automated text dissertation based around that breadth as you click on that TAS Says button. One of the things that TFNN has done recently, if you get a demo to this particular product, which I think has a lot of different indicators built into it, I'm going to show you those in just a second, other than the breadth, is you'll be able to get a 14-day free trial also to the Tiger's Den. So no credit card involved. Get a 14-day trial of this product. You're able to also get into the Tiger's Den for 14 days. So again, the product has a lot built into it. We're going to cover a little bit more aspects of it during this hour. But this is what's basically guided me in the right direction to hopefully trade this S&P index on the right side of the fence. You know, what do we do now with these S&Ps? We're going to talk about that a little bit more during the rest of the show. But, you know, this is one of the main topics that I look towards in trading indices globally. It also allows for drilling down into the instruments themselves within those indices. So if you look at the screen right now, I've got the S&P 500 internals up that comprise these breadth statistics, and it allows you to filter those particular instruments in a way that I don't think you've been able to do before. I hear the music. We're going to go to our first break, and we'll be right back. We're going to have Edmundus Gatinas on with us today.